yourself just briefly?
Sure. I am a retired sales executive. I spent 43 years in enterprise sales, helping 3 companies go public, 7 companies get acquired. Retired after spending 10 years as global vice president of sales for cybersecurity at IBM and then later HCL, and found a lot of startups, pre-seed, seed, Series A, uh, having lots of interest in their technology, but they weren't closing deals. So I launched a business, and that's what I do. I coach pre-seed through Series A companies on converting deals into revenue by coaching reps and founders on their sales cycles. So we'll talk a little bit more about that throughout the
Perfect.
session.
Perfect. That's the critical piece because I
I
see so
think
many.
so. I
Yeah.
think so.
Well, I come
Investors
from
think so. Yeah.
exactly. No, we're from the same background. Obviously, you're much more experienced than me, but I do also come from, the big tech and sales background. So yes. Okay. So as we speak of sales and traction and everything, so founders being I know that that founders confuse traction with replicable revenue or repeatable revenue. So what is the difference, right? So because they want to reach out to investors at some point, either today or later on. So what is it?
Yeah. And what I find oftentimes is they're doing it a little bit too early. So what I've learned is investors don't fund traction. They're funding repeatable sales and a path to helping them get their ROI. So that's what's driving valuation, funding speed, path to liquidity. Uh, Nearly everyone that I work with has plenty of traction, but deals are not closing. So for whatever reason, they're building interest, but they're not converting deals. One client was generating lots of interest, but nothing was converting. We once we converted, or once we got everyone talking about a single ICP and the accounts within that ideal client profile, and we built CFO ready proposals, uh, pipeline started converting, and it ultimately converted about 4x. So it's that shift from founder hustle to repeatable process. That's what unlocked their acquisition at a very, very nice multiple. I've been very fortunate where 2 of my clients have been acquired in the last 2 years, people who I've been coaching. Yeah.
That's perfect. So actually, I witnessed one
Yeah. Yeah.
with you. So since you started mentoring at our cohort, so the Xperia, right? So you're working with Daniel. So
Yes.
I know that we focus here at the accelerator to do the customer discovery process and the tests and everything. So what is the problem? What is the solution? That's great, but also we're not maybe really focusing. Uh, we should at what you're saying right now, right? So focus on uh, getting that check size bigger and close those deals. Why are they not closing, right? So traction versus repeatable revenue. That's very critical. So my second question is many founders, all of them actually chase uh, anyone with a pulse. Right. So as long as they're living, they think that, oh, okay, so I have to sell this idea. So is this feasible? I mean, should they be doing this? I know that
I think it
talking
depends.
to everyone is
Yeah.
good, but yeah,
I think it depends. Well, I think you're spot on there. Talking to a lot of people is good because they may know somebody in your ICP or ideal client profile. But I would argue that every non-ICP deal that's in the pipeline where you're pursuing something, I genuinely feel that steals time and runway and credibility. So I coach founders to define their ICP in three filters. Um, do they have a problem we're spending money to solve? Are they able to fund, right? So do they have access to funding? They may not know how to get that. And we'll talk about that because those that find you are not the ones who fund you. So we have to equip people to get funding. So do they have the ability to fund it? And I think this is just as important. Does winning this deal tell future customers and investors where you're going? So if they were to look at your customers and you're all over the map, well, you better be able to tell the story why. Why, why working with all customers is going to help you improve your business. And what I'm finding is that's becoming more and more difficult. So I do think an acute focus on your ICP, it just makes the difference between uh, working very, very hard or accelerating growth and liquidity.
Yeah, yeah, that's totally the case. And um, yes, we need to keep on working hard, of course, right? So it's striving, that's all about it. But also avoid, I think, as we say to the founders, falling in love with your product, right? Actually, you need to keep on listening the needs, and the needs keep on changing, right? So, well, customer discovery continues, right? You have to embrace it. And what we usually see is, I don't know how in your case, but I think we agree, it's the same experience, but founders are usually very comfortable pitching their product features, and they keep on, because they're in love with this, right? So they have to. So what is the cost or what is the danger here? Constantly keeping on pitching the product.
It's a really important question. And it's actually one that was the catalyst for me launching my business because I would listen to sellers pitch a product, uh, send the customer a brochure and a price, and then wonder why they were getting ghosted. And so I would suggest that when you're talking features or product capabilities, you're inviting comparison, right? People are jotting down, oh, they do this, this, and this. Great. The next person they meet, well, how do you do these things? As opposed to focusing on outcomes, business outcomes, monetize business outcomes that get funded. Champions may love your product, but somewhere back in finance, there's a CFO or somebody ladling out capital
Yeah,
to priority projects based on their ROI and payback period, based on how they're going to help improve the business. So if you think of the CFO, their job is not to say no. Their job is to allocate capital to projects that are going to generate the highest return for the business.
yeah,
So I help founders and reps in the moment on deals translate features and capabilities into business impact. And the only thing that C-suite talk about in this context is it going to help me grow my revenue? Is it going to help me reduce costs? And is it going to help me lower risk? And then ultimately, because adoption of anything new means change, we have to equip our champion with not only a business case, but how they're going to help or how they're going to manage the impact of change. So I'll give you an
yeah,
example very quickly. Um, I was working with a healthcare uh, founder, a SaaS provider, and we had $1 million deal that was stalled. This was before they engaged me. This was the catalyst for engaging me. Runway was getting tighter and they needed to sell.
yeah,
Investors were getting a little nervous. So they were selling, these are doctors, very smart people. They were selling to radiologists to help them detect breast cancer faster. Radiologists were in love with it because it helped them spend more time with patients. It helped them
yeah,
reduce mortality rates. It helped women avoid unnecessary treatments. But to the CFO, there's nothing in what I just described that shows up in a financial statement. So we reframed the pitch. to demonstrate that this was going to be a good business investment. And we reframed everything to now talk about, well, if a hospital has your technology, doesn't that equate into increased patient value and average revenue per patient? Guess what? That is what uh, uh, justifies allocating capital to this. Now, this was the second client of mine to be acquired. So this was not only doing wonderful things. I thought they were doing God's work. They were doing great things. It proved to be a great, great business solution as well.
Yeah. So we need to understand that being a founder, you need to cover because you're not working for at a global or big corporation, you need to do it yourself, wearing multiple hats, right? And
Mm,
then cover everybody from top to bottom. But the pitch changes, right? Because the concerns are different. The numbers guy want to hear about the numbers. The other
yeah.
guy, product guy, maybe, yes, that could be the champion, but totally they worry about different stuff. How about the go to market, right? Because we have to, I mean, the founders need to reach out and, well, to create traction and replicable revenue. There are ways to go, and probably we need to be testing those, which one works better, at what stage, early, afterwards, right? So product-led growth, what is it? Should we do this? Inbound, outbound, channel. So how do we do this? How do we decide?
Yep. So, Gooch, one thing I'll comment on as you were asking the question, I want to remind everybody, every company that I've worked for in this context, everybody who I've referenced was founder-led sales. These were some were graduates of
Yeah.
Founders
FI.
Institute.
Yeah.
And so the point being, these are not, I do work with larger companies, but in this context, these were all founders who were practitioners, they were doctors, they were people who knew their stuff in this business. They just didn't have my 43 years of sales insights. So that's the only difference. But once we got them there, they've all been successful. So to answer your question, you mentioned PLG. I think go to market. I think all of these things have a lot more impact than just go to market. Candidly, I think this is a cap table strategy. This is about investment money as well. So if you're talking to investors, let's empathize for a moment and remember they're talking with you about having their money work for them. This is about how do we increase uh, their return on their investment. So if you're thinking about a product-led growth, PLG, you'll get great logos if you can get to the right accounts who are innovators and willing to take some risks on a startup company. But rest assured, that's low revenue per
Hmm.
account because you'll be selling landing deals that you'll have to later
Click,
expand.
click and buy, right? So click and buy, credit card and buy. I mean, that couldn't
Well,
be.
that might be it, or it might be a very, very high touch. Um, this goes back to my previous client that I just mentioned. Very, very high touch, doing clinical trials.
Hmm.
But the reality is, you, no organization in 2025 is going to give a startup, here's $10 million because you have good slides and a good product. We need to start slowly. We need to crawl, walk, and run. So again, with product-led growth, you'll get some logos, but the revenue is going to be low per account because they're going to take a little bit of risk with you, and you have to expand that. Now, outbound will be slower at first.
Is outbound fund or led growth?
It could be, but it could be a founder with a sales rep. It could be
Okay.
a founder with a deal coach. But it's very much targeting the right accounts within your ICP. Now, here's what you're going to find. It's going to be slower at first, but it's proving to investors that you can win board level budgets.
Yeah.
Another strategy is going to be channel.
Yeah.
And I think that that becomes much more important later on. But if you go too early with channel, you're cannibalizing margin. You're suffering margin loss way too early. So I think that your go-to-market strategy isn't just about customers.
Yeah.
It's about the story that investors will fund.
Yeah, yeah, totally. Yes, I totally agree. So I understand. I mean, we're coming again from this kind of similar background, but my expertise or experience, how to say, is B2B. So we all talk about. I mean, during this webinar, when we talk and when you answer my questions, I feel like this is more of a B2B
From my
positioning,
perspective,
right?
that's my world. I'll be the first
Yeah.
to admit I don't
Yeah.
know anything about B2C
Okay.
other than when I go buy a car, I know how to buy a car. That's as close to
Yes.
B2C as I get.
Yes. Yes. I see. All right. Perfect. So, how do you then actually really help founders uh, at those, stuck deals? Do you unstuck them?
Yeah.
Is it? You said your company was called Let's Make It Rain or Rainmaker?
Let's make it rain.
Let's Make It Rain. Well,
That's
but
my
actually,
company. It's me. You're
the
looking at my
name
company.
actually explains itself. Okay.
Yeah.
All right. So yeah, I think you gave me a couple case studies, right? So that's how you do, right? Help them unstuck.
Well, so hopefully we prevent deals from getting stuck.
Yeah, yeah.
And hopefully, I get a couple different types of calls. Sometimes I get a call from an investor whose portfolio company, the runways, it's just shrinking. And it's either we become a statistic or we start executing on revenue. I get those types of triage situations. And now, interestingly enough, I'm getting calls from reps at larger companies who are chasing the leaderboard and they're using continuing education money to fund my involvement. But whatever it is, it's always the same approach.
Yeah.
One of my clients had a $380,000 deal. They had done some great demos. Everybody loved what they were doing, and they sent pricing, and then they were absolutely ghosted. Couldn't figure out why. They loving on the call. They loved me, but they were ghosted. So they engaged me. We built a business case that they had not done in CFO terms,
Hmm.
things that would impact the business. And we added a plan to help manage the impact of change. And we gave that to the people who liked us as a forwardable proposal to the C.
Okay.
Yeah, remember, those that find you are not the ones who fund you. So we provided everything that a CFO would need to prioritize this project the same way they were with others with
Yeah.
high ROI.
I
Uh,
was I was gonna ask you, how are you managing to reach to that CFO? But then you actually answered my question before
yeah,
asking, because
yeah,
you work with a team. I mean, the product guy, the champion works with you as a team. You're in the same team, so you build that trust. I mean, the team founder first builds the trust, and then you work with the team because, of course, obviously that product person or expert person doesn't know how to position a solution and get funded from the
right.
CFO anyhow. Yeah, got
So
it.
I've been doing this a long time, and I learned a long time ago that even though my managers always would yell, "Call higher, call higher, call higher," I, I've I've helped General Motors with probably $10 million plus in purchases over time. I can honestly tell you, I've never met with the senior executives at General Motors. They don't want to meet with me. They have people that deal
Yeah,
with vendors. So let's accept that, and let's recognize that every approver looks for the following things. I shouldn't say every, but the ones that I've worked with, this is the guidance they've given me. They're always looking for, when somebody comes to them with a deal, they're looking, is this person a credible technical advocate? Do they have political capital? Do I trust them? Are they going to be here to see this through adoption? Is there a line of business executive involved who's going to help this team get the budget and build a business case? Is there a credible business case that's going to show me how I'm either going to add or increase revenue, reduce cost, or reduce risk? Have they aligned all the resources, security, procurement, legal, internal and external consultants, compliance? Have they done all that? And then lastly, is there a project plan, a mutual action plan that includes a go live date? And when they have all that, I, as the approver, will say, oh, this is approved. This makes sense, as opposed to people who come to me and just say, we need a new toy. Because all they're going to get, I lived in cybersecurity for almost 20 years, 16 years. And the reality is that team has enough toys, even though they are really valuable. The CFO looks at them and says, guys, I'm quantifying risk at $100 million. And unless you can reduce it with what you want, I'm not able to give you any money. So every purchase has to have a viable business case. In the case of, the client I worked with earlier, we put everything together. The deal closed in 60 days. And that one win didn't just add revenue, it literally reactivated interest from the investors who bridged them to their next funding milestone. So that founder went from fearing a lost quarter was going to, by not closing a deal, we closed the deal and we reignited their funding round. That's what I do,
Yeah,
coaching individual deals to growth and liquidity outcomes.
perfect. That's great. Actually, this is great to hear because many founders kind of hesitate building a network and then which network, how can I go up the ranks, right? To go higher, just like you said. They don't necessarily have to physically go high up, but through working with their contacts, the team, just positioning the solution and maybe defining the audience together with the team and working with that team and then selling, and because sales points are kind of
Yeah, it
different.
really
Yeah,
comes
that's
down to finding somebody who, I mean, I've started sales cycles at very, very large companies, working with the low, not the, I hate to say that somebody's low in the equation, but they're they're not they're not making executives' decision. Enterprise architects are the groups that I've always found to be the greatest source of information about what's happening across an enterprise for technical software. Uh, uh, so I've always made good friends with enterprise architects, security analysts, people who, now I work with a couple clients who are commercial roofers, where my clients have to become best friends with janitors, facilities managers, admins, secretaries. Well, all of those people are the ones, in this case, the roofers, they're being leaked on from the roof. So they have to tell management a good enough story to get funding. Well, management's going to maybe look at that and to say, well, put a bucket down, deal with it, as opposed to, if we don't fix this leak, we've got mold that needs to be remediated. We've got people slipping and falling. We've got assets and inventory that's getting rained on, and it's costing us this. We've got insulation that needs to be fixed. The point
yeah,
is, everything that we're doing, everything that we're offering has to be translated into either revenue
yeah,
increase, cost
yeah.
reduction, or lower risk.
Yeah, yeah, totally. So whatever the solution is in which industry, I mean, it anyhow translates into this, right? So if it is a marketing solution, that's what I find obvious because marketing is directly connected to sales, right? But any other solution, let's take HR, right? Maybe it's a support function. Maybe you think that it is not directly connected to sales or decreasing the costs or increasing productivity, whatever. So you need to somehow translate, I suppose.
So I just learned a long time ago, there's a love language at C-suites, and it's how do we
Yes,
increase revenue, reduce
yes,
cost,
yes,
reduce risk?
yes,
Everything we do, even when we talk about increasing productivity, that has to
yes,
have a monetized impact
yes.
to get past the CFO. That's their job, not to say no, but to allocate capital where they'll get that ROI.
Yeah, those innovators, they do have another metric as well, like being innovative, right? But still, that piece is also tied to either productivity, sales, cost cutting, whatever it is, right? So always connect to that. So because we are focusing on early stage seed and pre-seed, so of course, capital, cash flow, these are very critical. So what kind of traps they fall into at that stage, those founders? How do you see this?
So I think first and foremost, hiring too fast is wasted runway. Um, if you're in a sales role, I think ignoring procurement and forgetting that champions may find you, but CFOs and boards fund you. I think this is a really important thing. I work with so many people who tell me, yeah, this deal's going to close. Well, tell me why. And as we start to peel back the onion, we find that there's people excited about it, but they have no political capital, they have no influence, they've never done this before. What we have to communicate is they're the patients, we're the doctors. And the more that you sell of your solution, the more you could argue the point, your customers never bought this. You, on the other hand, have sold this multiple times. You know how other clients buy this. Allow me to help you on this journey to a better tomorrow. So one of the things I help my clients with is put together a maturity curve. You're here today. With these business challenges. You want to be here with these business outcomes. Let's show you in a graphical manner, let's show you what this journey is going to look like to a better tomorrow. Um, so I think that helping those people buy is the most important thing. I also think that obsession with the wrong KPIs uh, is hurting. So obsession with pipeline and other soft leading indicators. I don't know who first said it, but I love the quote that revenue is vanity, profit is sanity, and cash is king.
Mhm.
Investors need to see how they're going to make money on their investment in you. If you're not talking in their love language, but you're instead talking about how generative AI is doing this and you're agentive. I mean, just remember who's in the room. They see 100 pitch decks a day, some of these firms. They're not judging them on how cool you are or how cool your technology is. They're judging it on how much are you going to be able to sell and how are we going to accelerate liquidity, if not, a nice lucrative exit.
Totally. I think this is the way to go. This totally makes sense, especially as the interest rates went high up, the money has kind of dried, and the VCs don't have so much money to spend, raise and then spend. So now they are really asking those questions, right? How much, what is the runway? And, because otherwise, previously, it was very easy to raise cash for VCs and they were eager
Used to
to
be.
spend it. It used to be. And in that environment, they wanted to pour money to not repeatable revenue, but not margins. They weren't even asking those. They were just fueling growth in the expense of what, right? Not creating an unsustainable business, I suppose. So creating a sustainable business is the critical thing, right? So at that seed stage and pre-seed, at those early stage companies, we realized that sales, marketing, they're hand in hand of course, just like we spoke, right? It's easier to translate this, but it feels chaotic, right? There's always a fire going on, burning, right? So what should the founders do? How should they manage this fire, chaos, and
Oh,
panic environment?
um, so I look at a founder in this context, I look at their role is to serve as the chief translator
Hmm.
of this chaos to investors. So marketing is going to hand you context, why these accounts, what pain, um, what business case language. Sales can then feed you how is that received by CFOs.
Yeah.
And I think that that loop is what convinces investors that you have a growth engine, not necessarily noise. You're able to um, bring to market certain messaging, and you're doing A/B testing, and you're trying and failing and trying and failing and trying and failing. And please, make no mistake, lessons are learned by failures, by failing, by tripping on
Yes.
and experimenting. So don't be afraid to try new things, but to an investor, they need to see that you're able to take all this chaos and translate this into how they'll get their money back and more. So it's a really, really good question.
Yeah. 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 Totally. Yes. They need to learn from all those experiences. And from my experience, uh, those VCs, I mean, they're as smart as you are, and they just want to have some proof points, right? Checkpoints. So maybe the milestones that you reach, I mean, that those founders reach, and how did you come to this, right? By failing. This is good. This is a check mark, right? So everybody fails as long as you learn from those, right? And you don't repeat the failure. That's great. So, and you mentioned actually the champions, and we talked about being a team with those product people, being a champion. I mean, teaming up with the champion, and then reaching out to those people who fund us, right? So equipping them and everything. But there's also one other thing. I remember talking to you at one other instance. You mentioned creating urgency, right? So how do you create urgency? Sometimes, those B2C commodity uh, product sales people reach out to me, and I start laughing actually, right? So because it is so obvious, like textbook creating urgency, pushing style. So it's not pushing, I suppose, right? How do you do that?
Yeah, it's interesting because earlier in my career, we used to always talk about a salesperson uh, being our own compelling event, right?
Mhm.
That's what we were doing as good salespeople. We were walking, talking, compelling events. I don't know if that's the case anymore, because the reality is I don't get to talk with the people making the decisions as much as I used to. That's just, and when I say I mean salespeople. So
Yeah.
again, let's settle in on understanding that in most cases we do have to equip a champion with a forwardable package for stakeholders. Now, this is not 47 slides. This is one or two pages of, you know, who's the technical advocate, who's the business sponsor, what's the clearly defined business case, have we aligned all stakeholders, have we removed all obstacles from making this a successful project. That's what has to go. And then with pricing options, good, better, best, so that the customer sees it, and we may choose to have that maturity curve where you are today to where we're going. So once we have that in place, urgency is not pushing.
Hmm.
Urgency is math. Doing nothing always costs more. So that healthcare CFO that I referred to, they only moved when we showed them that the delay was costing them $2.5 million annually. That framing didn't just close the deal; it proved to investors that the founder and me, because they included my a slide on me in their pitch deck, which I'm happy to do. But it helped them. It proved to the founder that they could quantify pain in dollars. And that's the difference between traction and fundable growth.
Yes. So when you say fundable growth, that brings us to the next thing on my head. So the investors are the people who are funding. So sometimes people, the founders are so much focused on their product, maybe in love with their product, and then they see those investors as people who have so much money and they're just, giving away. Actually not. They're getting their fundraising as well. They're fundraising from LPs, limited partners, with a promise. Of course, there is risk, but with a promise to multiply that money by investing into promising startups that can grow and exit maybe in time, in 5 to 10, maybe longer time frame. Ideal is less than 10. So that is a very well-defined structure, right? It's a
Yeah.
financial instrument, let's say so. So why and how those investors, VCs, uh, look at those metrics, care about, let's say, the deal discipline that we've been talking about, the funnel management, deal conversion, the life cycle. So you meet your client now, and then how long does it take to close the deal? And do they close? Are they efficient? Whatever, right? So why do they care so much about it?
Yeah, what a great question. So I'm just I try to use empathy in so many different aspects of my life, and this is a great example. So let's say you're pitching to an investor. Why are they talking with you? It's not because you're a nice person, you got a grand face, you have a cool slide deck. They're running a business to make money. That's that's the business they're in, for their money to make money. So you're not the first meeting that they've had, period. You're certainly not the first one that they've met with today. They're getting 100 pitch decks a day. So they understand. Let's have empathy for them. First of all, they understand when they meet you, you've never done this before. In most cases, you've never done this before. They've done this 100 times.
Hmm.
So they understand when you're nervous. They understand when you don't get when you're reading off of slides. They understand when uh, you don't have a run rate yet of $100 million ARR. They understand all this. So it's not that they look past it, but if you don't have your growth story, you're not going to get money. That's what they're buying into. So you need to, as a founder, when you're going to these people, you're selling almost like that maturity curve. This is where we are today. This is where we're going to be, and this is where we plan to be in 12 months, 24 months, whatever it is. So demonstrating, and I'm repeating myself, but demonstrating to them that you're able to do CFO proof proposals, consistent velocity in your deals, change management baked right into the proposal. So you're thinking about what could get in the way of this deal getting approved. This is a really important question that I coach my founders and my reps on. When it gets to a certain point and you're expecting an order, you got to ask the question, why might this not happen? What could get in the way? And when you demonstrate that you're doing this to investors, um, you're showing that you can scale capital efficiently.
Yeah.
And capital efficiency is what translates directly into higher multiples and a faster path to liquidity.
Yes. So it's not having a great product. It's not having a few, maybe 100 clients or whatever. but actually really scaling. That
Well, if
brings,
you have those first two, it helps. Don't get me wrong,
yeah, yeah.
but there, I
Yeah,
mean,
of
there has
course.
to be
That
something
is
you're
that, those are
selling,
the first steps, I suppose, right?
but
So
those are can't. Yeah, it's
reaching
not
to
limited to
scalability.
those.
Not, of course. Yeah. So we have to start somewhere. So you start from there, but then what is your one piece of advice to scale, right? How do we achieve scalability? And uh, of course, scalability, not everyone uh, thinks the same, I suppose, right? So let's put the terms correctly, right? What is scalability, right? Is it sales? Probably not, right? So I mean, software is a great example of a scalable solution, right? Because it's actually approaches to, I mean, the cost approaches to zero as you land more clients, as long as, of course, well, still you have to calculate what is the acquisition cost of that client and stuff like that. So,
Absolutely.
how can they scale?
So I'll keep it simple. I think a lot of it has to do with a model of crawl, walk, and run. So don't chase
Yeah,
unicorn playbooks.
yeah,
Nail 3 to 5 ICP wins with CFO ready justifications and change management plans. Do everything that we've been talking about. Document them. Um, if you send win wires out, it's remarkable. If you send a win wire out to your developers and your engineers, and yeah, we just won this deal. Not only are you acknowledging and rewarding the salesperson or how we as a team won this deal, but you're educating your entire company on this is why somebody bought, this is their expected outcomes. Um, and people will be able to translate their hard work into revenue. If they're an engineer, if they're a developer, if they're a tester, if they're an HR or an admin, when they see that we won, they're equating their hard work into the growth of the company. So I think that's really important in terms of documentation. And then once that you start to crawl and then walk a little bit and it's time to run, that's when it's time to hire reps to repeat.
yeah.
That's how you turn founder hustle into investor backed growth engine and ultimately liquidity.
Yes, that's perfect because that I see probably the most common trap or problem
Yeah.
after proving the kind of the product market fit and then having your first few, maybe even 100 perhaps, let's say, or maybe 20, 30 clients, uh, but then you're stuck at, uh, at
Yeah.
that stage because you cannot really replicate yourself being the founder, because founder-led growth, it is manageable if you're a good salesman, if you build trust, if you follow, whatever. But if you can't replicate your duty, I think then scalability is a big question mark.
I
Mark,
think to that point, one last
yeah,
point on that. Ultimately, you have to get to a point where the business can operate while you are doing something different.
yeah.
Um, there's
And
a
you will have to fundraise, you will have to do some product, whatever things. And
and you do have to take care of your family and
yeah,
you do have to sleep and you do have to stay healthy. So, running 1,000 miles an hour um, is only going to you might run that fast, but you don't want to run
is it
into a
sustainable?
wall. Yeah. So good discussion. Yeah.
Yeah, yeah, perfect. That's great. So, Mark, thank you so much for being a mentor, a very active mentor at the Washington, D.C. cohort. Now that we're transitioning to the in-person accelerator, of course, obviously we need people to be here in person. If you have any chance to be in DC after October week kickoff, just please let us know. So we would love to host you here. Just would love to have you with this select group of 20 startups. So we're still selecting. I think we have 5 of them accepted to the program right now. So we have 15 more spots. So I know that the founders can work with you when they are in the program, right? So this is one thing, but other than that, if they want to work with you, if they're not in the program, if they're whatever, maybe after the program, so how can they find you? How can they work with you?
Sure. And thank you for that. And I look forward to visiting. I was just at Wolf Trap, as a matter of fact. So I was in uh, the DC area 2 weeks ago. So I would say, look at the customers you're working with. Pick a deal that you can't afford to lose. That's where I come in. Together, we'll build the business case, the change management plan, we'll build the internal sell package so that your champion can get it funded. Um, one deal, one deal can change your growth trajectory. It'll change your valuation. It'll change your liquidity path. This is what I do 24/7, and I've done it for decades. Would love to work with you.
Perfect. Great. Thank you. So this is a great experience. So thanks to you and to all the other mentors that work with you and us here in the DC chapter and other chapters, of course. So this is the most critical piece in helping early stage founders, right? So first, define who is the most promising. So once they actually apply to any cohort, including the Penn West Accelerator, the in-person accelerator in DC, we ask them to take the entrepreneurial DNA assessment. It is a proprietary cognitive assessment by FI. There are hundreds of thousands of to-be entrepreneurs data there, so we keep on adjusting the data, so we know who as a person have the traits to be successful, right? Are they coachable, right? Can they strive and everything, right? So this is the first piece. We find great founders. So this is one tool. We reaching out and defining great founders, and then guide them with our mentors like yourself, great mentors all around the world, and a structured program. So that structured program really helps them reach those milestones. Well, most will not be able to complete the program, which is totally fine. So we can focus on the most promising, the rest, right? Usually it's the 30% that completes the programs. So they become portfolio companies, and we keep on investing and helping, guiding them through their lifetime, so they can grow, scale, just like we talked today. So it was great discussion. Thank you. So many critical points you made. I asked if they have any question, but people thanked. So thank you for everybody. Thanks for spending your lunchtime with us. So it's almost 1 p.m. Any last things to say before we say bye to everyone?
I wish everybody the best of
Yeah.
luck and continued success.
Yes. Thank you. Thank you, Mark. So looking forward to having you in DC.
Thank you, Coach.
Right. Cheers. Bye, everybody. Thank you.